Folks, if you are confused about what happened with Nvidia, stick around because this is about to get interesting. I'm going to break everything down. So don't click nothing, don't smash nothing, don't buy nothing. Just listen.
Shares of the company are lower despite the fact that it beat top and bottom line expectations, grew revenue by more than 120%, gave solid guidance, and announced a $50 billion stock buyback. Expectations were apparently so high for Nvidia that it appears anything short of crushing even the most optimistic forecasts is being seen as at least a mild disappointment.
Now look, the bottom line in my videos always comes first. So here's the bottom line. Nvidia essentially beat any single parameter in these earnings you can imagine. They got beat revenue, beat earnings per share, raised guidance, and announced a $50 billion buyback. Essentially, they can buy Intel at this point with that buyback. And yet the stock market basically said, eh. Now, what's going on here? Why isn't the stock taking off into the stratosphere after these amazing results? And the answer is quite simple. The answer is, this is a prime example, folks, of a buy the rumor, sell the news event. Everybody were buying Nvidia, prepping for these great earnings. And when the great earnings came, that just basically was already priced in. And the overbought stock got pulled back and corrected a little bit, which is kind of what happens every single time. So there's nothing here. There's a nothing burger. No surprises here. In fact, I literally told you this might happen in the video I posted a few hours before earnings. Titled literally, Urgent Warning Nvidia Stock. I mean, I couldn't have titled it better. In that video, I showed you Gene Munster, one of the head Nvidia analysts, basically saying, guys, short term after earnings, we might see a drop because there's so much expectations on the shoulders of this one company. I mean, they can't possibly meet it in a way it's going to cause another spike.
That's kind of why I think that the stock is going to trade down modestly, but I don't think that stock action should be representative of the opportunity in Nvidia over the next couple of years.
Now, look, I didn't know in advance it's not going to go to the stratosphere. I had no idea where the stock is going to go. That is why for the past week, I've been beating the same drum, saying, hey, whatever happens, we got a plan. If it drops, if it tanks, we double down. If it goes up, we keep buying normally. Simple as that. Now, is there a DCA opportunity here with the stock dropping at this point when I'm making this video 2-3%? Not really. Look, in my book, it's very simple. I buy a stock when it's in double down territory. For me, it's 20% below the 52-week high. If the 52-week high for Nvidia is $140, the range would be at $112 and below. So until Nvidia gets to $112, for me, that's a normal DCA. You buy at a normal pace. There's no point in increasing now because it dropped 2 or 3%. So it's a nothing burger. Not yet. Don't get excited. Normal DCA. Now, if you look at the earnings, it is absolutely mind-blowingly impressive because even quarter over quarter, this company has blown my mind. Quarter over quarter, data center revenues up 16%, 15% up revenues, gross margin 75%. Operating margin 62%, $19 billion. Are we even understanding these numbers? But more impressively, and this is absolutely insane, $16.5 billion of net profit, which means a 60% net profit margin for a company like Nvidia. This is insane. And they've beat everything across the board, and they raised guidance, and they're announcing buybacks, and still that is not enough for the stock to skyrocket. But hey, let me tell you something. It's actually good. It's great that this stock isn't skyrocketing. If you love Nvidia stock and you would love to own more of it at a reasonable price, it's good news for you. Imagine the perfect deal in the stock market in which you get to buy the perfect company. That perfect company is very, very simply can be put like this, right? The business gets better and better and better and better while the price stays flat, 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 flat. So as long as the price stays flat, but the business gets significantly better, the quality of the deal for you is improving, and you should be more excited at buying at the same price when you're actually getting more bang for your buck.
The story with Nvidia is more about like how much of the economy is adopting AI, how much of the economy is CapEx spending on these things. And what we saw in their earnings report was actually really, really good. And the last time we saw a big uptick in productivity per worker in the S&P 500 names was really back in the mid-90s. And that obviously coincided with the internet and PC revolutions. We've been stagnant for the most part for 20 years on that metric. And if you get a big uptick, we've started seeing an uptick these last couple of years in that metric. If you start seeing an uptick in that type of measure, man, look out above in terms of the stock market. That kind of productivity that we have not seen for 20 years would be really, really welcome.
Demand is still well ahead of supply. Supply is still coming, and that's what's allowing revenue to grow into the second half of the year. And as you look into next year, the optimism, the stock, at least our optimism, is the new product family, Blackwell, which adds a lot of content.
I think we're so early stages of this AI revolution, and really, from a technological standpoint, how important semiconductors are moving forward. So, I think that ultimately there is a long runway for this technology. And I think obviously Nvidia has been an early dominator in the space.
This is one of those unique companies that can have wings that basically take it for a pretty awesome growth rate through 25 into 26 and even beyond. The fact of the matter is that there's, Jensen says there's $1 trillion worth of old data centers that need to be converted to GPUs and a similar number of upcoming data centers. That's where your demand's coming from. In terms of the weakness last night, I was really surprised when the stock was down $8 or even $10 at a point in time. I don't think those are valid. You have to understand Nvidia is ramping 4 brand new products simultaneously for high output. They've never done this before. These are new supply chain, new parts, and they're not ramping for cost efficiency just yet. They'll do that in 3 to 4 quarters and margins will settle out again. We think the law of large numbers will kick in. Nvidia has been able to grow 100% plus for several quarters now.
The people that actually understand this business, they understand that this is temporary. At some point, the premise, which is that time is the best friend of great business, it's going to catch up. And this stock is going to be pulled up by the great results they've just delivered. You've got Morgan Stanley raising their guidance from 144 to 150. Wells Fargo, 155 to 165. JP Morgan, 115 to 155. And you have Bernstein, 130 to 155. All the big analysts are basically raising guidance, raising their price targets after these earnings, despite the stock pulling back. Now, you have to understand something. Usually these analysts, they follow the wind. They're like a leaf in the wind. Wherever the street goes, they go with it. For these analysts to go against the street and actually raise guidance when the market is basically lukewarm about the stock tells you a lot about what actually just happened here. These numbers they just delivered, they're impossible to ignore. It's quite simple. Now, a lot of people ask me about SMCI. SMCI is a stock I showed you a year ago. The stock price was $200, and I told you, hey, this is correlated with Nvidia. It's cheap. Hey, take a look at it. Stock goes 5x from that point. My community basically celebrates how great of an oracle I am. But then I make a video and I say, look, at $1,000, this is not a good deal. They have no moat, and I don't see how this company really is anything like Nvidia. This is basically an assembler of servers at $1,000 per share at this valuation. It's insane. At 200, it was a good idea. At 1,000, God, no. Now, nobody watched that video. It got 20,000 views, which is 1/5 of the views I get. And I know why. Because nobody wants to hear negativity and actual analysis about something that everybody's FOMOing into. If I'm saying bad things about the favorite hype stock of the moment, nobody's clicking on that video. And I didn't mind. I don't mind yet. I still made the video. I still posted it because I'm going to deliver what I think is the most valuable information for you guys, regardless of views. Now, as far as SMCI goes, I told you 5 months ago that this is garbage. I hope you listen. And as far as the general market goes, will this trigger a market pullback? Will this take the entire market down because Nvidia basically didn't fly after the earnings? No. The earnings were fine. It's just kind of a temporary knee-jerk reaction. I believe the market is okay. The market is strong. Nvidia is strong. The future is strong. They have a strong CapEx cycle ahead of them. I do see a broadening of the rally as far as IWM, small caps. They're still looking for some love, and I think this is an opportunity for people to allocate capital to where the more underpriced opportunities are, like IWM. So I do think there's more opportunities here opening up in the small cap section where there hasn't been a lot of love lately. And with all this sideline money and with Nvidia basically kind of hitting a peak, at least temporarily, I think there's a good chance we'll see a broadening mainly into the IWM, into the small caps. And for those of you who would like to get more Nvidia stock and you fear that it has gone out of the stratosphere, you'd never get it again, one thing I can promise you is that whatever you say about Nvidia, this is a volatile stock. It's going to see a lot of ups and downs. You're going to have plenty of opportunities to buy Nvidia at a cheaper price. There's no point in going absolutely ham, going all in right now. The proper way is to dollar cost average slowly. Every single week, buy a little bit, ride the wave, ride the average up and down. and then buy a little bit more when it's down. Buy a little bit less when it's up. I've actually made a whole presentation about it. Today's Academy lesson was about that. DCA strategy, A to Z, complete tutorial, 1 hour with examples, everything you need to know. So if you haven't yet considered joining the Academy, all the details are below. Patreon.com/TomNesh. Would love to see you there. The recording is actually available on our Discord for Academy members. So even if you join today, the recording is there for you. Go watch it right now. Thank you so much. I'll see you next one. Peace.